Hey, welcome everybody. This is Sil from candlecharts.com. We have a spotlight today regarding what's happening in the markets with respect to the Feds and the interest rates. So let's take a look at what's been happening and how that affected the markets. So I got a chart here, a daily chart here of the E-mini, the S&P futures. You can see the trends have been since that big reversal back at the end of 2018, rising, and then the lows are still rising. The highs are not rising as rapidly. They've hit a wall here in terms of a ceiling. They're still pressuring upside as this has been a bullish market for quite some time. So this is what it looked like going into, this was Monday, or pardon me, after Friday last week. And then as Monday came in, they actually broke free. Personally, I didn't feel that was a significant, strong breakout type candle, but nonetheless, they did break out. It's all about what they do after the fact. And then Tuesday, they pretty much showed the levels of indecision, but still made a new high, but nothing really selling and nothing earth-shatteringly on the bearish side either, so they're still trending upward. So after that, of course, with the Fed coming out, I knew and figured and warned lots of people it would be some level of volatility. And see, just be careful because at this point, maybe things drop, but otherwise, support is here. Now that we've crossed this ceiling, now it's going to be acting as support if they can hold it. And sure enough, that's exactly what happened. You see that long lower shadow at the bottom. So they raced lower on some of the news and then came right back up and making a new high here as well. The trend here is still rising. The one thing to caution is here also on a shorter time frame for the month of October is while the lows are going up fairly steeply, the highs are not going up quite at the same pace as you can see. So just a word of caution to see what happens. If you start noticing some bearish activity, this may be in jeopardy of breaking down. They'll be looking to go to these levels down below here near 3,029.80 on the S&P. I'll take you to an inside look on the hourly chart as well, and then you can see what had happened coming into the news item. So they came in, made that new high, as I said. That was on the 29th yesterday. Through the night, sort of just quietly moving along. This is an area that was going to be of concern. Sure enough, they sold off, but even with that hard sell-off, they came back aggressively back to that other area of support and former resistance and bounced off. They did it one more time, but an aggressive bull sash formation again back to that same level I just mentioned. Now they're just back to the highs again. So this is where it looks great, very, very bullish in nature, but this here is where you need to start watching out from this point forward in terms of what's going to happen from here. Looks great, looks bullish. Again, daily chart, hourly chart, all looks great. But they need to show signs that they're going to close through this after especially an aggressive rebound and an aggressive move higher. As aggressive as that was, they still found resistance here. Yes, they went through, but now, again, they're finding resistance here. So as aggressive as it all seems, they seem to be struggling at a place here where they failed as early as even yesterday, at least briefly. So keep an eye on that. So far, everything's on the bullish side. Yes, the things are going higher and moving in a better mode. However, with Fed news of that type where the interest rates were dropped, volatility would pick up. We all knew it would. It's now a question of what will they do next. So from here, just keep an eye on it. And then also take a look at the link that we have below regarding our Halloween special. And take a look at there closely and see what we have to offer. Thanks again.